Dear students, in this video we'll be discussing about different types of bank accounts and few banking procedures related to this accounts. As banking students, you all know that the primary function of a commercial bank is to accept different types of deposits from public. In the recent years, so many new types of accounts have been introduced by banks, but traditionally we have the four types of bank accounts as you see on the screen. The first one is fixed deposit, savings deposit, current deposit and recurring deposit. We'll be looking into one by one. Let us learn the concept of each of the deposits through its features. First one is fixed deposit. A fixed deposit account is a type of account or type of deposit which is deposited by a customer for a fixed period of time at a fixed interest rate and a fixed amount is deposited. It cannot be withdrawn before the expiry period. It can be withdrawn only after a specified period of time. That means an expiry period. But nowadays banks are allowing the customers to pre-close the fixed deposit accounts. The customers cannot draw any checks against the fixed deposit accounts. And fixed deposit accounts are the accounts which fetches the higher rate of interest. Along with that, while a customer makes a fixed deposit, he or she will be receiving a FDR acknowledgement receipt. That means the fixed deposit receipt. Each and every customer should store this fixed deposit receipt for future reference. Then the interest about the fixed deposit. Interest amount is usually paid on the due date of fixed deposit. Then the customers have another facility. They can advance the deposit amount up to 75% if he or she requires money before the expiry period. Then this FD accounts or FD deposits are not a negotiable instrument. Hence, it cannot be transferred from one person to another. Then I have already told you about a FDR. That means the fixed deposit receipt. If the fixed deposit receipt is lost, a duplicate receipt can be obtained from the bank by submitting an indemnity bond. Then, as I already told you, there will be an expiry date for a fixed deposit account. Once the fixed deposit account is expired or the deposit is expired, we can renew if we want. And on the renewal, a new receipt will be issued by the bank. So all these are the features of fixed deposit account. Nextly, we will be looking into savings deposit. These are deposits made by people of lower and middle classes who wish to save a part of their income to meet their future needs as well as to earn a little income upon their savings. And this savings deposit also have some features. As I have already told you, this is opened by middle and low income group people who can only deposit a small amount. Then these type of deposits are useful to inculcate the habit of savings among public. Then there will be some restrictions regarding the number and amount of withdrawals from this deposit account within a specified period of time. But there will be no restrictions on deposit. How many times the people can deposit? They can deposit according to their wish. Then at the time of opening a savings account, the depositor is given a passbook. Along with that, he or she will be enjoying the facility of checkbook also. Upon the savings deposit, people will enjoy a fair interest as the bank can utilize a good portion of the deposit on the account of restrictions on withdrawals. Checks and drafts drawn in favor of depositor are accepted to savings bank's account as deposits. Next deposit is called current deposit. Current deposit is also known as demand deposits. This is a running account in which money can be deposited and withdrawn any number of times and without any limit during a working day. This itself is the most special feature of this current deposit. Current deposit holder can issue checks to third parties against his account. Current account is opened by a customer for convenience in making payments by check. Because of this feature, this type of deposit is mostly suitable for big businessmen who have numerous transactions on each and every working day. Generally, there will be no interest is given to current account holders. This is because the banker cannot profitably employ the funds in the current account as it is always demanded by the depositor. A current account carries certain privileges which is not given to savings account, such as one is checks, drafts and bills etc. drawn in favor of third parties are accepted for collection provided they are properly endorsed. Second one, overdraft facilities. You will be familiar with OD, right? OD facilities means providing a provision to depositors to collect or to take amount which is beyond the amount or the limit they maintains in their account. So overdraft facilities are given in case of current accounts. Finally, loans and advances granted to current account holders are not paid into cash but they are credited directly to their current accounts. So these are the features of current deposits. The next topic we will be discussing is the procedure for opening a current or savings account. And I think most of you will be having at least a saving bank account. So normally when you go to open a bank account, what all are the procedures you went through or you go through in order to open an account? That we'll be looking into. The first one is filling an application form. The bank will be providing you a form which is printed in a prescribed format, and this application form may be different in different banks, and it will collect all the details such as name, address, occupation of the customer, and also the form will contain all the rules and regulations of the bank, I mean the terms and conditions. So by filling or by providing all the correct and accurate details in the form, we'll be putting our signatures. That means we are declaring that all the facts and figures we are provided are true to our knowledge. So the first procedure we'll be doing is we'll be filling the application form. The second thing, the bank will be asking for your photographs. Now, the customers or the prospective customers will be supposed to submit 2 or 3 copies of his recent photographs to the bank. This is for different purpose. Photographs will be pasted onto your passbook, onto your application form, and maybe into your specimen signature card also. Third one is comply with KYC norms. You may be familiar with the term KYC, know your customer. Know your customer or KYC is a process by which the bank obtain information about the customer identity and the address. For completing this KYC procedures, they will be asked for some valid documents. The customers will be supposed to submit some valid documents such as maybe passport, driving license, Aadhaar card, PAN number, voter's ID. So all these kinds of documents are accepted by banks to complete the KYC procedure. Then the fourth one is letter of introduction. This is not compulsory nowadays. Anyways, a letter of introduction means it is a letter given by a responsible person known to the banker introducing the prospective customers. That means this person, the person who introduced the customer, is a person who will be known to both the parties. That means to the bank as well as the new customer. So that person will be providing a letter of introduction. The bank will accept that letter of introduction. Fifth one is specimen signature. Specimen signature means that is a card holding the signatures of the customer. A banker must get 3 or more specimen signatures of the new customer, which is called the specimen signature card. And nowadays everything has been technical, right? Everything has been updated. So now banks are used to keep the scanned copies of the signature of customers for speedy processing of transactions. There is no requirement of any something like specimen signature card. They'll be storing the signature, the scanned copy, the digital signature the bank will be storing. The sixth step is obtaining mandate. Mandate is a written authority given by the customer to the banker in order to authorize a third party or another person to use the bank account on behalf of him. Only if me or you wants another person to use your account or operate your account, you have to give a mandate to the bank. Then only the bank will allow the another person to use your account on behalf of you. This is what you called mandate. The seventh step is opening the bank account. After all the above formalities, the applicant is required to deposit the minimum amount as insisted by the bank. After accepting this initial amount, an account will be opened in the name of the customer in the ledger of the bank account. And finally, the bank will be supplying you certain things. One is pay-in slip book, checkbook, and passbook. Paying slip book means it is a book containing certain printed slips which is used by the customer for the deposit of cash, checks, or drafts. Second one is checkbook. Checkbook is a book which contains 10 to 20 blank checks with counterfoils. The check forms are serially numbered. Checkbook is generally used or issued to a customer to facilitate withdrawals and payment to even third parties. Finally, passbook. It is a copy of customer's account in the bank's ledger. It is written by the bank and records all the dealings between the banker and the customer. And you know that now the entire banking procedures are converted something into a virtual platform. Everybody is now using their mobile banking and internet banking. So the usage of this pay-in slips, checkbook, and passbooks are very less in numbers. Anyways, if we request the bank to provide us all these things, the bank will definitely provide you. Even the passbooks are free of cost. They'll be providing you at any time the passbook, checkbook, and the pay-in slips. So by these, every customers will be going through all these procedures in order to open a current account or savings account. These are a common and basic procedure. While discussing the procedures of opening an account, we have discussed one topic, that is letter of introduction. That we have already discussed what do you mean by letter of introduction, and nowadays this is not at all compulsory. We can even open accounts without this letter of introduction. But in your textbook you can see they have listed few challenges or problems faced by a bank when opening an account without a letter of introduction. These challenges may be: a dishonest person may become a customer, loss of overdraft money given to that person, loss of statutory protection, even a minor becoming a customer, then undischarged bankrupt become a customer. Bankrupt means an insolvent person becoming a customer. Then possibility of giving incorrect information to a fellow banker. All these things are the problems when arised when a bank is allowing a person to open an account without the letter of introduction. The next type of deposit we are discussing is recurring deposits. Recurring deposits is also known as cumulative deposit. This is actually a combination of both savings account as well as fixed deposit accounts. A depositor here deposits a fixed sum of money every month for an agreed period, and at the end of the specified period, the depositor gets back the complete amount together with an interest. This interest is actually provided on a compound basis. For example, we can say I start a recurring deposit account for 1 year, and every month I'll be depositing an amount of 10,000. So by after 12 months, after the expiry of 1 year, I'll be receiving 10,000 into 12, that is 1,20,000 rupees plus a fixed certain percentage of interest. For example, we can say 3.5%, 4%, etc. These usually this much percentage of interest is provided on a recurring deposit. So these deposits encourage savings among low and middle income groups and help them to save a fixed sum of money every month. So this is the basic feature of recurring deposits. This is another type of account, that is joint account. Joint account is a bank account opened in the name of two or more persons. This is usually used by relatives, couples, business partners, whoever. They should have a level of familiarity and trust with each other. And there are two ways of opening or titling a joint account. One way is using the word "and" between the account holder's name. That means, for example, Johnson and Jensen. Johnson and Jensen. That means both the parties must sign in to access funds from a joint account. That means it is not allowed to sign by only one person. Both the parties should authorize or permit the account's use. The another way is to use the word "or" between the two parties. That means Mr. Johnson or Jensen. That means any one person, only one of the parties need to sign in order to access funds from a joint account. So this is what you call a joint account. We have discussed the procedures a customer go through to open an account. Now we will be looking into what are the situations or how a bank account is closed. The relationship between a banker and the customer is on a contractual basis. This relationship can be terminated by either of them, either by the customer or by the banker, just by giving a notice of his intention to the other party. Now let us look the procedure or situation of closing an account which is at the initiate of a customer. A customer can anytime close his account. For the same, he must inform the banker in writing of his intention to close the account. No banker can ask for any kind of explanation or reasons for such closure. Now let us see what are the reasons that tempt a customer to close his account. One is when a customer is not satisfied with the terms such as a rate of interest or bank charges. Second one, when a customer is not satisfied with the quality of services given by the bank to the customer. Finally, when a customer loses confidence in a bank. So at any these reasons, the customer can close his account. Secondly, we'll be discussing how the bankers used to close the account, or how the bank accounts are closed at the initiate of a banker itself. A banker may take initiate to close an account of the customer due to following reason. First one, when the banker finds that an account is not operated for a long time. To close the same, he will be sending a notice to the customer, and after if he is not responding, or if he is willing to close the bank account, the bank itself initiate the closure procedures. Second one, when the banker finds that the customer is an undesirable customer. A customer will turn to be an undesirable customer when he continuously issues checks without sufficient funds. He frequently instructs to countermand payment of check. He frequently deposits checks that are not honored. He flouts rules of operating the account. At any of these conditions or any of the situation, the banker can initiate the closure of bank account. To close the account of an undesirable customer, the banker must give notice in writing to the customer in order to close the account. Along with that, a banker should stop all payments from the customer's account in the following situation. 1. When the banker receives notice of customer's death or insanity or insolvency. Second one, when the banker receives an garnishee order. And the third one is when the banker receives a notice from the customer that he has assigned his credit balance in the account to a third party. So in any of these situations, the banker should stop all the payments from the customer's account.